I want to talk about lending and borrowing. Someone in the comments of one of the videos was like, "Well, I don't want to spend 7, 8%, 6%. That's pretty expensive to borrow stablecoin." And I just kind of want to bring some clarity to this and kind of really walk through one of my portfolios here and how I really think about it because I get paid to lend and borrow. It doesn't cost me anything, and if you actually go through the numbers, it'll make a lot of sense. Now, if you're looking at this and saying, well, 7% to borrow USDC, that's more than my mortgage. That's huge. It's so interesting how our brains, when it comes to, let's say, borrowing, we're like, well, 7%, way too much. I don't want to spend that. But when it comes to actually earning yield, it's like 20 or 25% isn't enough. Or if it's like, hey, well, you could lend out your assets and make 6%. Most people gawk at that, saying it's not enough. So it's really interesting how our brain works here. But let's just do this. I have $212,000 lent out over AAVE at a combined APY as of right now at 2.43%. So let's run that number. There we go. That's $5,151 per year, which again, most people would say that's not very life changing, so they wouldn't do it. But that's not, of course, why we do it. We want to borrow against it and go earn yield. But over a month, $429 I make off lending my ETH and some USDC over here for barely any kind of return. So $429 every single month. Now, I have also borrowed 42,334. So let's go 42,300 times 0.0589, 5.9%. So the debt repayment, so to repay and service my debt, costs $2,491. Over a month, it's a whopping $207. 429 minus 207 equals $222 I make, which again, this isn't the reason why I do it. But yes, of course, your borrowing is always going to be a bit higher. Your lending is always going to be a bit lower. But do remember, you're never at a 1-for-1 ratio here. You're always going to have a healthy loan to value ratio. And so you're always going to have more assets on this side of the balance sheet than you do the liabilities on this balance sheet. And you'll find that most of the time it equals out. Or maybe you'll just be spending, 1 or 2% to actually borrow and service that debt. Which, of course, if you're moving this 42,334, which I'm going to claim this $1,000 and yet again pay down this debt. This was $50,000 at one point. It's now 42,000. I'll actually shoot a video where once this hits about $1,000, I'm going to take it and repay another $1,000 of this debt down to 41.3. But anywho, at a 50%, 60%, 100%, 120% APR, you're running circles around the maybe 1 or 2% borrowing lending is going to actually cost you. And most of the time you'll find it equals out, meaning this is free money. It's 100% free. It doesn't cost you anything. Zip, zero. And again, it's why I'm such a big fan of lending out assets you want to hold long term, borrowing against it, earning yield, and then either stacking assets here or paying down the debt. And there's really no right or wrong. And you might even flip every $1,000, you pay down some debt. The next 1,000, you buy some ETH or you start buying some BTC and adding it to your treasury. Remember, and I always like bringing this up, the whole philosophy, the whole game plan we have in UIG and Fast Track, or you if you're watching this YouTube channel, and we love to support you in any way, shape, or form. So if we can, just let me know in the comments. It's to build our treasury. It's our base. It's our long-term holdings. Let's BTC, ETH, or other sound assets or assets you see have a massive potential for future appreciation. You're building your treasury. Then you're unlocking liquidity, basically what you're looking at right here. How can I get free money out of this so it's just not sitting there? Then how do I cash flow that capital? And then how do I compound that capital consistently? Now, we can't control what the markets are going to do on a daily, weekly, monthly basis. Your portfolio may be up in dollar value or it may be down in dollar value, but we can guarantee what we help our clients do, what we're helping you do, is you're going to have more assets next week than you did today. You're going to be stacking your assets, compounding your assets, sowing the seeds. So in the future, you'll be up 200, 300, 500%, which is actually fairly conservative if you think about it. Because if you look at every time there's a bull run, or just even remove the bull run and just look at an overall return of the crypto markets. I'm playing this game because I know crypto, I mean, it's a $3-4 trillion market cap. It's nothing. 25 trillion, 50 trillion, $100 trillion market cap is coming. So I want to position myself now because in 10 or 15 years, it's going to be worth 10, 15, 20 times more. And if I can build my bull run portfolio now and then not have to on ramp any fiat, but I can just keep compounding my assets and stacking more, I win the game. It's the traders, it's the short term thinkers, and it's those who are just trying to beat the markets, who are constantly disappointed with their own performance and they're constantly destroying their own wealth building. There's no compounding effect happening because they're up and then they're down. They're up and then they're down and then they eventually quit, which I don't blame them. Play the long game. If you're resonating with what I'm saying, hit the thumb up, subscribe to this channel, share this video with someone you know it could serve. Let's get the word out there. DeFi is for the people. Banks and Wall Street is not. Yet we know that, yet we keep giving them our money. That madness has to stop. So feel free to add to this conversation in the comments. I'd love to hear your thoughts on this. So again, let me know in the comments below. With that said, I'm going to get out of here. Don't be afraid on taking a little healthy leverage as long as you're playing the long game and it doesn't cost you anything. In fact, ultimately, it costs you next to nothing to unlock liquidity. And then because of the returns that you can earn on your actual borrowed capital, your arbitrage on that is probably 50, 60% on the upside, which is pretty sweet. Again, leave your thoughts in the comments below. If we can help or serve you in any way, let us know. And with that said, we'll see you in the next video. Peace.